Money at Work series. Today's installment concentrates on wasteful spending that we typically make and why that's important. It's important because small, simple changes that we can make can take wasteful spending and transfer those into investable dollars, which over periods of time can have significant positive impacts on things like savings, retirement, asset accumulation. First thing we look at is credit cards, mainly the interest and the fees. Don't buy what you can't afford, especially at high interest rates. If you're going to use your credit card, you should make every effort to make sure to pay it off by the end of the month. Paying interest on purchases is one of the biggest wastes of money there possibly is. Also, when looking at credit cards, you've got to understand the APRs. There can be different APRs for purchases, different APRs for cash advances. If you violate the card terms and conditions, you could be hit with a penalty APR. And finally, the introductory APR, sometimes referred to as a teaser rate. So understand the different transactions and what APRs are associated with those transactions. And then also understand if you're not paying that balance off and you're carrying a balance according to the interest rate, the amount of money owed, and the payoff term, you really need to understand and be aware of how much it's going to cost you to pay that balance off over X period of time. Remember, we're trying to put money to work for us, not against us. Next thing is bank fees. Americans pay an estimated $17 billion yearly in bank fees for insufficient funds and overdrafts, according to the Consumer Financial Protection Bureau. These costs, however, just the tip of the iceberg when it comes to bank charges. ATM fees, monthly maintenance fees, and other bank costs associated with things like your checking and your savings accounts can total $1,000 or more over the course of years. Next thing is online deals. Deals are one of the biggest things people waste money on. Just because something's on sale or discounted doesn't mean you need it, and it certainly doesn't mean that you should buy it. Before you purchase something, take a moment. Be sure you'll actually use it, enjoy it, and the quality will be up to your expectations. Memberships. The average monthly cost of a gym membership right now is about $58 per month, but 2/3 of the people who have gym memberships never set foot in the gym. If you bought a gym membership and you're not using it, you'll likely throw it away, $700+ per year. Gym memberships are usually the example used here, but it's not the only thing you're paying for that you're probably no longer using. You may have magazine subscriptions, whether physical or digital, that you don't read, clubs you no longer belong to that you're still paying dues for, streaming services that you're not using but you're still paying for. So you need to do an evaluation and go through and find out things that you're paying for. If it has no value, you're not using it, cancel, transfer that money into something that can earn interest and grow over a period of time. Next thing is premium cable packages. Even if you're using these premium cable packages, it's still a big waste of money. There's so many different types of ways that you can approach an entertainment package these days. You really don't need to spend a lot of money. And that money in those cable packages for the premium channels, once you cut that down, transfer that money into asset savings, investments, that can make a significant impact over a period of time. And this has a dual advantage. If you're not stuck to the TV with hundreds or thousands of channels to choose from, you're probably going to find yourself going out and doing other things, driving away from the TV, which has, like I said, advantages in itself. Going out to dinner or dining out. No list of top money wasters would be complete without dining out. Average American households spend more than $3,000 dining out, with some spending significantly more than that. Now, you don't have to give up every nice dinner at a restaurant to cut the cost significantly. Instead, be strategic about when you dine out. Instead of wasting money grabbing lunch at work every day, pack a lunch. It'll be at a fraction of the cost. And when you do go out to dinner, make an event, make it worthwhile. It's not just about the food, but about the experience. Next is the new car. Yes, you want to get the car that you want, but it doesn't have to be brand new. The average car loan takes almost 70 months to repay, and Americans now are going deeper into debt to buy more expensive cars than ever. Car buyers on average borrow more than $30,000 for a new vehicle, and they're left with average monthly payments of $500 or more. For most car buyers, there's absolutely no reason to ever buy a brand new car, especially when you consider new cars lose 10+% of their value the second you drive the car off the lot. Get the car you want, find a pre-owned version, 12, 24 months, handled by a good owner, and that'll save you a significant amount of money. Next thing is tax deductions and tax credits. First of all, we want to understand a tax credit reduces your tax bill. Tax deductions reduces your taxable income. Around 20% of taxpayers eligible for things like their earned income tax credits don't claim this benefit on their return. That's not the only tax credit that gets unclaimed either. Taxpayers make all sorts of mistakes on their taxes, including failing to make the right choice about whether to itemize or claim the standard deduction, or choosing the wrong status for filing. Uncle Sam and the government is notorious for wasting money. Don't give them more than you need to. And finally, unclaimed 401k matches. Around a quarter or 25% of Americans are wasting $1,000 in free money by not taking full advantage of the 401k match. A study a few years ago found that 25% of employees were not investing enough in the 401k to earn a full employer match. The average employee who failed to earn the match ended up leaving $1,300 plus on the table. So in these type of situations, you want to fund your 401k up to the match. Anything over and beyond, we recommend taking, diversifying in other concepts, strategies, and products to build you the retirement plan that you're looking for. Employees total left $24 billion in unclaimed 401k matches on the table every year. Stay tuned for more Money at Work series installments, and take a look at millionairemindset.life to get more information, tips, advice on how to stretch your thinking, create your vision, and achieve more.